Well, hello everyone. Sorry for the delay. Literally, I we're about to log in and I get this notification that says data breach, all of your passwords have been compromised, which is no fun. So I panic changed a couple passwords because dear God, like what the F is that? So I apologize. Not the best way to start your live. Um, Interesting day in the market, guys. So we're going to get to that. I do see lots of information here already in the chat. Life and budget. We are going to totally get to that scenario. But we got Olivia. Hello. We got Gabby D. We got Laura, Cornell, Christian, Amina. We got Rod and Laura. And we got Jen. So awesome to have you guys joining me on the live. If this is a first time for you, I'd love for you to let me know where you're tuning in from and where you're at in the home buying process itself. All right, so I always love to start these lives with a market snapshot. So just to recap what's been happening. So ever since the geopolitical issue with Russia and Ukraine, we had been seeing some improvements in the MBS market, which stands for mortgage-backed securities. So we did see some improvements in interest rates over the last couple of days. And then today, we had two really significant things happen. And that was the ADP report showed way stronger than expected jobs. And then we had a statement from Fed Chair Powell that was about knocking off the 50 basis point rate hike in March's meeting. And so they're now only going to raise the Fed funds rate to 0.25%. And so what ended up happening, and because this is like kind of a complex issue, is that because that is now off the table. All right, let me rewind. Let me try to explain this quickly. So the Fed funds rate is the rate at which the government loans out to banks and businesses for liquidity purposes, for payroll, for manufacturing, for machinery, for equipment, all kinds of things. So they loan it out. When they loan it out at 0%, companies can actually maximize their profits. If we increased it 0.5%, that was really going to dip into companies' margins. And because of that, we saw a lot of volatility in the stock market. The biggest issue right now is inflation. So that is the rising cost of goods and services. And so the issue that we're having now with Ukraine and Russia is going to impact that significantly, and they already believe that that compression in terms of supply chain is already going to impact businesses enough, right, that they don't feel comfortable raising the Fed funds rate to 0.5%. So in essence, right, investors today saw this as positive news, and they took their money out of mortgage-backed securities and put it back in the stock market. And we will see things like that. So over like a couple of hours, like right when I woke up this morning, we were already down 42 basis points. We ended up the day at 102 basis point loss. Now that isn't catastrophic because we've seen some days of gains. And so we're basically back where we were like a couple days ago. And this is the kind of thing that I was already anticipating because everything is so volatile. And everything at this moment is interconnected. And so just expect that the news is going to like ping pong. It's just going to ping pong interest rates. So up and down with the way of how people are feeling about, inflation. All right. So I hope that was helpful to you guys. One big thing to note though, because I was reading the employment report, is that small businesses actually lost almost 100,000 jobs. And I think that is pretty significant given the fact that, this last era after the big recession was all about entrepreneurs. And it just goes to show you that in inflationary times with the rising in wages and the limited labor, that big companies are more suited financially for this kind of economic environment. So I do think that this kind of pressure on small businesses is going to put some people out. And so I just want to pay attention to that too. If you're somebody who's self-employed, if you're in an industry where you need contract labor, this is something to really pay attention to. All right. So now let's jump into answering some questions that you guys have. So Life and Budget got here early, so we're gonna talk about her issue. It says, I guess this will be more of an etiquette question. I'm in the process of getting a home equity loan with our credit union. I know the process is between 45 and 60 days, I was told, but I haven't had a lot of communication with my loan officer, and I've been calling 3 to 4 times a day to ask questions for about 2 weeks, and she's only called me back twice. We didn't have a conversation. She just called me to ask 2 questions and said she would call back, that I missed, and haven't talked to her since. My loan was submitted on January 31st. My husband told me to lay off. So I did, and the next 2 days she sent me 3-day e-sign documents. He said that if it were him, he would have put me on the bottom of the pile because I was calling too often. My question finally is that something loan officers do when someone calls too often? And in my husband's words, not showing patience, is there certain etiquette I should have with loan officers? During this process, FYI, I went through this credit union for my mortgage last year, and they never contacted me back with my pre-approval to this day, so I went with a different credit union. Sorry so long. Okay, so a couple things there. I am like a 3 strikes you're out kind of person. So communication is amongst the number one things that consumers complain about when they're in the home loan process. I've said this a lot of times on the channel, but it is like getting a mortgage is the second short-term stressful event in a person's life, and first is death of a family member. And so when you think about it in that context, it's like people's place where they're going to live, it's security, it's their largest liability. Communication is very key. And so the fact that this person hasn't called you back is very surprising. And no, I don't think that it's within the company's core values. Now, based on what your husband said, human nature could make somebody put your file to the back. But honestly, there's a lot of compliance regulations that would prevent that. And it's more probably that they're overworked and have so much volume that they can't get back to you in a timely manner. That's actually probably, I think, not more reasonable, but that's probably more likely the answer. And so I think that if you already had issues with the credit union when you were getting your pre-approval, and I know it's convenient for you to get a line of credit because you bank there. I think you just know that they're not great at loans. A lot of companies right now, guys, have long turn times, although those are improving significantly because volumes for home loans are way down. But it is something for you to really think about when you're choosing somebody to go with. Credit unions may have sometimes the cheapest rates. A lot of them are non-for-profit, but if they can't get the job done, if they take so long that interest rates move, they probably weren't saving you money really in the long run. So I probably know that doesn't make you feel better, but I would have called a supervisor. I would have just left to a different bank. You are going on 90 days now, and that's a long time. All right, so let's see here. Oof. So, all right, let's see. Okay, so Christian says, is it worth it to refinance to remove PMI on an FHA loan? I purchased last year with a 3% rate, and now I believe rates are in the 4s. Is going up an extra percent worth it to remove my PMI? My PMI is $265. So this is actually where you would want to do a side-by-side comparison. I don't think it's a bad idea for you to actually get your file in line, right? Because I do think that the interest rate market is pretty volatile, and I think that there is a chance that you might be able to get a rate under 4%, and you might actually be able to save money. My rule of thumb typically is if you can save $200 a month and you're going to be in the property for more than 4 years, you will absolutely break even and you will save money. And so you really want to check what that looks like. Another thing that you might want to consider is what it looks like to maybe consolidate some high interest debt into that, but you're looking for debt that isn't going to be reoccurring. So student loan debt, right, is something that you could pay off. Sometimes people have short-term loans for, personal loans that they took out to consolidate credit cards, or, personal loans for materials that they needed or tools that they needed to do their job. But if there is a high interest payment and you don't see yourself reoccurring the debt, it might make sense for you to actually look at what your total options are, so that way you can account for way better monthly savings and not just the mortgage insurance. All right. So let's see. All right, so we talked about rates. Okinawa, Japan. Oh my goodness, Tinkerbell. Thank you. We have Lali, we have Shadow Lama, we have Raul. Good evening. Does a buyer who has 20% down payment have an advantage over a buyer who with FHA with no down payment when purchasing the same house? Absolutely. So anytime that you can show strength and qualification, so this is, large down payments, conventional financing, because typically you have to have a higher credit score to qualify and lower debt to income ratio. Whenever you can remove risk factors from the seller, you're always going to be more competitive of an offer than somebody who has no skin in the game. So there's that. Let's see. Oh, Central Coast Living. Well, nice to see you on here. Thank you. Thank you. David Ramirez says, I love my credit union for banking, but they had terrible options for home loan when I was shopping. Yep. And it's another reason why you guys have to shop around. People do business for a variety of reasons. The most popular ones are timing, because they have an urgent need and they need it to be done quickly. They do it because they want to save the most money, or they do it out of convenience, right? Who's going to make it easiest for them? And so you do want to shop around, especially when you're considering using a large bank or credit union. All right. So Amina says, hi, Lizzy. My husband and I are looking to buy our first house in DC metro area because interest rates are changing every day. What's the best source to track them to be able to stay informed? Guys, it is so hard for consumers to find a really good resource to track the daily movements for interest rates. I will tell you that the Freddie Mac interest rate survey does a survey nationwide, and they give you the most accurate costs and interest rates for the nation, but it is 1 week lagging, which means that a lot of things can happen and those rates may not be real. But places like Bankrate, and they do have to be updated, but they're advertisements. So oftentimes you'll see an interest rate that's on Bankrate, and then you'll see something that says like special terms and conditions apply or something, or it's 20% down, or it's only in these states. It's just really misleading. So here's what I would say. I would get a quote from a reputable loan officer, and then I would track economics. So I would listen to news about inflation. There's a service called Mortgage News Daily. Like, you can see a lot of the headlines for free on that, right? And they typically post something about rates multiple times a week. So that's something that you can check out. And then if you're like literally in the process of under contract, ready to go, I would just be in regular communication with your loan officer. So I hope that helped answer your question. I know it's kind of a loaded one, but I don't know that there's really great resources for consumers. Oh, thanks, Big Gucci Sosa. Guys, don't forget to hit the like button. Thank you. Thank you. All right. So Julie Rocky says, for new construction homes, are base prices standard lots added to the starting price? How can we explore developments that are currently proposed or recently approved sooner rather than later? I mean, you can always track permits, city permits, to figure out like where the new developments are. But I think that you're going to be waiting kind of a long time. New construction standard, it is just basically the land plus the base shell of the house. And if you want to do any improvements or any adjustments to it, it is going to increase your purchase price. That's one of the negatives, right, of buying a new build, is that you pay premiums for anything that you want to add. But the benefits are that you get to live in a brand new house, and you get to finance those upgrades into the home loan. So not all bad there. Oh, and Javier has been quiet on YouTube. You know what? He's been busy, guys. I mean, he is a very busy real estate agent, and he's had a lot of things going on personally that I'm sure, are keeping him from YouTube, but it's his favorite thing to do. So I'm sure he'll be on soon, and I will send him your good wishes. All right. So Central Coast Living says, my son will be coming home from serving in the Army. He's 22. He has a Chase credit card so far. What lines of credit should we get him so he's in a good position for VA financing? So I would say, 2 to 3 lines of credit are great. Try one installment loan, so like an automobile or a personal loan that he can demonstrate, regular, consistent installment loan payments. And then I would get 2 revolving accounts and then try not to exceed more than 30% of the spending limit. So that way you have like a regular balance that they see you paying off on a regular basis. So typically interest rates are like credit scores are typically most impacted 12 months after you've had the credit history, but even more beneficial, like it's not as volatile if you have a balance after 24 months. Zeke, I'm like super vain and it looks like half my head is cut off. Is that just from my side?
I think so.
Okay. Sorry, guys. I reading your questions, but also like it looks like I'm just like from here up. Can you guys tell me? Am I missing like the top part of my head? Okay. Olivia Howard says Rocket Mortgage sent me something in the mail for getting a loan at 8% that my mortgage would be $888. Is that a scam? I'd have to see what the item is. I can't imagine with all of the regulation and compliance that company has that they would send you something out that's not accurate. But because I don't have anything to reference, it's really hard to comment on that. Okay. All right. So Raul says, I'll be submitting an offer this Friday, full ask 207. I want to ask the seller's concession for 2% closing costs. Is this typically a deal breaker for the seller? Raul, it's a very competitive market. And I don't want to discourage you from trying to get the best deal that you can. And I'm sure that there are sellers out there that would pay for seller contributions, but it isn't something that I'm seeing on a regular basis. And I read an article recently that said that the national average for buyers to a home is like 15 to 1. And so if your offer is going to, again, have more asks of the seller, I just don't know that you're going to be competitive enough to get it accepted. But that being said, I'm not your real estate agent and I don't know your market and I don't know the specifics of that house. So, all right. Okay, so everyone said they see my full head. Okay, good. Okay. Thank you guys. Sorry, you know what's weird? It's like, I know that you guys are there, but it does feel like I'm talking to my lonesome. And like Zeke's here and I'm like, oh my God, I can't concentrate. I only see my forehead. All right. So let's get to some emailed questions. So we've got Lolly's question, which says, hi, awesome video. I needed to watch it twice at least. So question, when shopping around, will a mortgage broker / correspondent or bank be considered shopping for 3 different estimates since the credit will be pulled the second and third options? Will they know that I'm shopping? Will this affect their estimates? So the first person will not know that you're shopping your home loan unless you tell them. The second will know that you shopped with the first, and the third will know that you shopped with the first and a second, okay? Now, I would always be transparent with all the people that you are shopping with because I think you'll get the most competitive offer. But I will tell you that there is more than just interest rate and fees that you want to ask because there's a big difference, I think, with a mortgage broker and a correspondent bank. And so, whenever you add more people to your loan file, the more complicated the communication gets and the process gets. And so advantages, off the top of my head, mortgage brokers typically have lower rates, but they generally have longer turn times and they generally don't have like as consistent of underwriting conditions that, pull throughs as you would get from a correspondent bank. If you have any kind of hair on your loan, like, multiple jobs, you need overtime or commission to qualify, you don't have as great of credit, or you're looking for a quicker turn time, correspondent banks, I think, are the easier way to get your home loan done. But that being said, everyone can check most people will know that you are shopping for a home loan. Okay. And I think that if they know you're shopping, I do think you'll get a better rate. All right. So let's see here. So Stargaze says, if my property taxes on my house go up, will that affect my monthly payment? Stargaze, that would be yes. Especially if you're impounding. So if you put 20% more down on a conventional loan or a jumbo loan, most of the time you won't necessarily have to impound for property taxes and insurance. Now, in a state like Arizona, it doesn't really make a whole lot of sense not to impound because our property taxes are so low and the interest that you would earn on keeping those in a savings account is minimal, okay? And I think the benefit of not having to worry about when they're paid is like a huge plus and worth like, the couple $100s that you would pay for that if you even earned that. Okay. Now, in other states where you're paying thousands of dollars for property taxes, this makes sense. Okay. So you just want to pay attention to that. But yes, as property taxes increase, as your homeowner's insurance increases, it will impact your monthly payment. This typically happens once or twice a year, depending on how they assess those things in your area. But I would definitely check those statements because you'll find out like, by looking at your mortgage statement one day, they'll say that you are short your reserves. All right. Let's see here. Okay. So NAC 162 says, what would you say is a good interest rate at the moment for refinancing? Does it also depend on the location? Honestly, it's really hard for me to comment on interest rates because anytime you say those, you have to have like so much compliance. So it's difficult for me. I am going to reference you to the Freddie Mac interest rate survey, and I am going to recommend that you call. So there's that. Hold on, I lost your question. Oh no. Shoot. I don't think interest rates depend on the location. Truthfully, I think they're more dependent on your FICO score, the loan to value, and the type of loan program you're going with, and if you're pulling out cash or you're doing a rate and term refinance. Thank you, Life and Budget, for the super chat. Thank you so much. I appreciate it. Just so you guys know, all the money that I get from here actually gets donated to a local Arizona charity. So I thank you very, very much for that. And I'm happy to answer your questions. And I definitely think that you should maybe consider another option for your line of credit. Okay, so let's see. All right, Tinkerbell says, hello. We're about 1 year out from buying a house. One loan company told us having no debt is bad. We have all great credit scores. How true is this? Thanks, Lizy. You know what's tough, truthfully, is that it depends on how you ask the question. Like if you said no credit, I'm going to think no credit score, right? I'm not really thinking debt. I'm thinking credit score. And having no credit score is a high risk to the bank because we don't know how you're going to repay your debt. But if you're saying you don't have any debt and you have a high FICO score, then no, you don't need debt to qualify. But you definitely need a credit score. So I hope that helps. Richard Cabrera says, love your content. I'm a new LO trying to find my way. Oh, thanks very much. I appreciate that. Best thing I did as a new loan officer is check into coaching. I did Brian Buffini at first, and then I moved over to the core. Core coaching is by far the best coaching for loan officers. All right, so Sherry says, Bank of America credit card reported me to the credit bureau, but it's their mistake, and they refuse to admit their fault and delete this to the credit report. Any advice on how to get it deleted? A couple things. One, I need more information on why you don't believe that it is factual. So the Fair Credit Reporting Act allows for you to dispute items with Experian, TransUnion, and Equifax. If you have supporting documentation, it's up to the creditor to prove you wrong. And if 30 days they can't, they remove it from your credit bureau. So a lot of things that, are typically misreported are, a mail return. So let's say they had the wrong address or the wrong phone number and they weren't able to contact you and you weren't aware of a debt. One time, and I won't say the name because, you can get sued. But I did have this one credit card. And what happened is I charged on the credit card and then I returned the item, but then I had made the payment on it. And so technically they owed me like $20 in a refund. Okay. It's like not a big deal, but they sent me back the $20, but I never received it. And so I called in and said, hey, I never received this $20 refund. I need you to resend it to me. So they resent it to me, but then they charged the account for the $20. And it was like a 6-month process to get this thing removed. It was very annoying. But you want to stay diligent on these things because a late payment within the most recent 6 months can have up to a 30% a 30-point impact to your score. Okay. And depending on where your credit history is, that matters. All right. Let's see where we're at. Okay. So Jacob says, does the inspection come after the offer? So that means based on the inspection, you can negotiate your offer or back out. This is a really great question, and we get asked this all the time. And I'm going to preface this with I am absolutely not a real estate agent. I just know a lot about the transaction. So inspections typically come after you've have an accepted offer, and typically there's a time period for when you can do them. Now, if you find repairs that need to be completed, you can ask the seller to repair them, or you can ask for a credit. And there is some flexibility with negotiating terms. If you don't like their response in the state of Arizona, you can back out so long as you're within your allotted time period and still get back your earnest money. Now, again, you will want to check all of that information with a licensed real estate agent, but it is information that you can also Google. And there is that. Guys, Javier is calling me. Let's answer. Well, hello. People are missing you on my live.
They're missing me.
Yeah, I had a gal say that you haven't been on YouTube lately.
I know. Did you tell them I'm selling a house?
No, I said you had something going on with your life. Can I put you on speaker?
Sure.
So this is proof that Javier and I are friends in real life.
Who's listening?
Oh, I have like 49 people on this live. Do you guys want to ask
Oh,
Javier a
shoot.
question?
No. I was actually, I'm sorry, I didn't know you were live right now. I had my uncle call me and he was asking me to explain a cash out refinance, and I don't know how it works. Can you explain it to me?
Yes. So this is a good one. So he's asking me about a cash out refinance. So essentially what happens is you're allowed to, depending on the occupancy, so if it's a primary residence, you can get up to 80% of the value of your property. And that's generally how it works. It pays off the first mortgage, and then you get the excess after closing costs and the payment of the first mortgage or second mortgage or however many loans you have.
That doesn't make sense. So if he owes, you did the refinance for him already like 2 years ago. So I don't know if he has so he needs to have at least 20%, 80% paid off already?
No.
Is that what you said?
No. Hold on. So I'm going to give you an example, and this is
Yes, please.
okay. So assuming that he owes $150,000 on a house, okay? And the house is $300,000. He can get out up to $240,000. So you're going to pay off $150,000 with that. So there's $90,000 in equity that he can pull out minus, let's say, $5,000 for closing costs. He would be able to potentially put out $85,000. So it's the balance of your mortgage plus the closing costs minus 80% if you were going to max out your loan to value.
Okay, so he has to get a new loan then.
You get a whole new loan on a cash out refinance.
Okay, so if I'm $100,000, I know this is totally unreasonable, but $100,000, and so they can they can do a refinance up to $80,000, and if their mortgage amount is below that, the difference is what they can pull out in cash.
Yes. Now, obviously, you have to qualify for this, so like you have to be able to pay it debt to income ratio wise, and you have to have like a high enough FICO score to do it. But yes, that's essentially how it works.
Okay. All right, that makes sense. So it really doesn't make sense to do it a lot of times because you're going to be basically getting a huge payment again.
No, it depends on what you're using it for, right? So cash out refinances can be used for investments where you're going to be earning like a way higher return than the interest you're paying. It can be used to do home improvements, which will then improve the value of your home and make it honestly a better place to live. You can use it to pay off debt and free up equity or free up like monthly payment, cash flow. So, I mean, there's a lot of reasons why a cash out refinance makes sense. But if you're just going to pull out the money to live off or to spend, that's just obviously doesn't go for my smart sense rules of like why you would do a refinance.
Oh, okay, cool. Do I have a code for your Smart Sense app yet?
No, but we'll talk more offline on that. I can't wait to tell you about it.
Cool. All right. Yes. Sorry to interrupt your live.
No, this is a good question. I hope everyone could hear this. Okay.
Cool.
Awesome, honey.
All right. Well, we'll go back to it. Take
Okay.
care.
Thank you. Bye.
Bye-bye.
Okay, guys. So hopefully you learned something about a cash out refi. Okay. So let's see here. All right. So Raul says, I recently paid off $30,000 of credit card and a personal loan debt approximately 3 weeks ago. My FICO score remains the same. I'm submitting an offer on Friday. What can be done for immediate FICO results? So a couple things. One, I would call each of the creditors and find out when they report to the credit bureau. This is important because you'll want to know this date because you're almost 30 days in, and that's when you'll want to repull your credit. If not, you can ask your loan officer about a rapid rescore, but you will have to obtain updated balance letters. And what I would probably do is I probably would just get the updated balance letters on the credit card and just show proof of the payment of the installment debt. Because technically when you close out an installment debt, when you close out an account, sometimes that can have a negative impact on your score. So just an FYI on that. Okay. Sherry says, I paid automatic payment monthly. They owe me $300, but they said I didn't pay them $200, but they owe me $300 in a credit. But they disagree and say I missed payments and reported me to the credit bureau. Do you have, can you show proof of the automatic payments? If you can, I would ask to speak to a manager at the customer service department. Sometimes what happens is that there was a glitch in the bank where they didn't pull out the funds or they applied the balance to something else. I have seen this happen several times. Like they'll say, oh, we applied this to principal, but not to interest. And it's something dumb like that. So I would talk to a manager. Pranishi says, really appreciate this session. What difference does a FICO score of 780 make if interest rates versus that of 741 or 800? Want to understand how that works. So if you're doing agency financing, so anything Freddie Mac, conventional, Fannie Mae, conventional, typically anything 740 and above has the same pricing. If you're doing jumbo financing, those different tiers make some difference, and especially depending on the lender, and all of the lenders have different criteria for FICOs. I will say that the higher the credit score, the lower mortgage insurance, and also the easier it is to qualify in the automated systems. All right, so Devin, guys, I'm meeting Devin in person tomorrow. Very excited about that. Says, thoughts on homeowners skyrocketing tappable equity, and will people be able to pay higher prices using HELOC to cover inflation? And go. So there's, I don't know how to answer this question because I don't know that I've properly done the research, and I literally hate people that just speculate. But to my understanding, wages have also increased at a rapid pace, and affordability is actually better in today's market than it actually was in the 2000s. So people make more money to their housing payments than ever before, and they have more savings and less debt. And so I do think that people are actually in a better financial position, but I do see lots of people trying to tap into their equity, less now that interest rates have gone up. I don't know that it's going to be as big of an issue as it once was, because people have seen in their lifetime the bottoming out of real estate. So I still don't think that pulling out your equity is a popular trend. And also home equity lines of credit, because they were so burned during the recession, they have really restrictive guidelines too. So they no longer allow 100% financing. Again, you have to have a higher credit scores to even apply for them. So I don't know. That's my thoughts. All right. So how does PMI get calculated? Is there a way you can negotiate this? Are there accurate calculators online? It's really difficult. Unfortunately, there's a couple different companies, and typically they only provide the calculators to loan officers. And it's dependent on so many different things, and credit score is just one of the factors. It's property type, occupancy, debt to income ratio, how many borrowers, location. I mean, there's a lot that goes into that. So you will want to get a quote for mortgage insurance if you're using a calculator from a loan officer. All right. So Monica asks, how long is a pre-approval qualification good for? So qualifications are typically people answer that question in relation to your credit. So a credit report stays good for 90 days, and then you have 20 or 30 days after that to close your home loan. So 120 days in total. Income documents, asset documents are good for 60 days. So generally speaking, when you find a home, you typically have to provide updated financials. You may have to have your credit pulled more than once if it takes you longer than 4 months. All right. Dee Dee says, if you're able to qualify for a conventional loan, are there any benefits to looking for FHA loans? Do people apply for both? Yes, actually there are. So depending on if you've owned a home or not, FHA loans have lower down payments. If you are tight on your debt to income ratio, FHA loans are a lot more flexible. They don't require as many reserves, and typically they have lower requirements for FICO scores for lower interest rates. Now, where they're not beneficial is one, I think there is a stigma on lower qualified clients being, pushed to FHA. I think that if you have a higher FICO score, mortgage insurance tends to be higher on an FHA loan. And so sometimes even though the interest rate might be slightly higher, the monthly payment is significantly lower for that reason. So I do see people do comparisons. My team likes to provide at minimum 2 to 3 scenarios. And oftentimes we are comparing them just so that people know what the difference is. All right, guys. So we got 15 minutes left. Don't forget to hit the like button. That's how I get this channel promoted, please. Okay, so Cardtrick says, I'm currently in the process of changing my last name. I have a new social security and ID. Do you recommend I also get my last name changed on bank statements before talking to a lender to get pre-approved? What about my passport? So long as your driver's license and your social security number have your legal name, you don't have to show any additional documentation. Your credit report actually shows us any AKA names that are associated with your social. So oftentimes that's enough verification for us. At a maximum, we'll ask you for your marriage license, but I think that this is it. Obviously, you'll want to get your passport updated for travel, and you'll eventually want to get all of your financials updated, but it isn't necessary for a home loan. Deborah says, should you apply for a loan before you retire or after? Well, that depends on so many things. Sometimes people's finances are a little bit complicated. So I know that, for instance, I just qualified a person whose pension doesn't take effect for 6 months. And, it would have been easier for them to qualify while they were employed, but they have $200,000 in the bank and they have more than enough money to live on. And so unfortunately, that person, because they did not apply back when they were gainfully employed, does have to wait a little bit longer before they're eligible to receive their pension. And it's within 60 days of their first payment date. So it is, dependent on your situation. All right, let's see. Nicole says, if I apply for an ARM loan, do I need to qualify for a payment now and a payment amount when the loan adjusts? That's going to be specific to the lender. Most lenders will, most lenders will have some sort of stipulation that lets you know what the maximum rate is. But typically, if it's fixed for an extended period, 3-5 years, you're typically qualifying on the lower payment. But there are some banks that do have requirements for at least 1 to 2% above the first adjustment period. I haven't done an ARM in a significantly long time, so I will want to double check that answer. God, and you know what's crazy? The reason that we haven't sold a lot of ARMs, truthfully, is because they just haven't been as competitive as a 30-year fixed rate. They're basically the same. But I do think that in the future, those things will be a lot more aggressive. I know in the jumbo market, they're a lot more aggressive. So I think I'm probably going to end up doing a video on this, so stay tuned. Okay. So Pranishi says, does getting pre-approval from a big bank like B of A help? Or should I go directly with a builder preferred one? Will the interest rates vary significantly? I think that it's prudent to get a variety of quotes, especially when you're going with a builder's bank. So I saw one, and I'm not going to name the builder again because I do not want to be sued, but they were charging the client like 3.625%, like, and I was in points. And you know what's funny is that the client actually understood that they were getting that as their interest rate. And I was like, you got to let me see this fee sheet. Like, that's not even a rate that's available at this point in time, because that's when rates were in the mid fours. And I'm like, send this to me. I looked at it and I'm like, oh my God, you're mistaken. This is not your interest rate. This is the points that they're charging you. And so I do think that it's a very important thing, because not everyone looks at a lot of mortgage quotes. To find somebody that you trust, get a couple of quotes and see if they're not the cheapest, if they can match or get close. All right. Does the Lizy household plan on having a mortgage on your casa when you retire? And oh, good. I'm excited to meet you. You know, my plan is, I'm in a house that I plan on living in for 20 years, truthfully. And I'm at the point in my finances where I live well below my 70% budget. And so I have a plan and I have a rainy day fund. So I put money into stocks every month and I pay a portion to my principal balance. It would be nice not to have a mortgage. And so that is something that I concentrate on. So that's my plan. But generally speaking, I typically say, whenever you're within like 10 years of retirement, and if you find that you should at least look for the house that you're going to be in forever and really concentrate on minimizing your debts. All right. So Lolly says, with new build, they sometimes ask you to use their lender to get help towards closing credits and upgrades. Is this worth it in your opinion? Okay. So that same scenario where they were charging her an obscene amount of fees, they were also giving her a $5,000 credit. And sometimes you just have to like look at the fine print. It's like if they're charging you $12,000 and giving you a $5,000 credit, you still might be able to get a cheaper quote. I've never known a builder not to require you to use their financing, or not to at least get pre-qualified with their financing, but you are allowed to use whoever you want. All right. So Orion Soar says, why are the down payments for acreage so high and the interest rate higher? Can it be lower? You know what? I'm not sure exactly what you're talking about, but you might be referring to a commercial loan. And commercial loans, or, land loans, I mean, because there's fewer options, right? You're always going to be subject to like limited supply, and so they can charge what they want. Raw land is tough because there isn't anything really of value to assess that on, and there's a lot of risk for the bank. So there's risk in like how you develop it, there's risk in what you do, whether or not it's going to be worth, what it's worth. And so that's why, and they're just trying to hedge their risk. So Natasha says, hey Lizy, do you see a lot of appraisals coming in low lately? Many properties I look like comped at 450 are closing at 500 with conventional, but of course the MLS doesn't show gap amount offered. Just talking Metro Phoenix, of course. I asked my appraiser friend the other day. Actually, let me read what he said, because I don't want to butcher this. But he actually said that there was like way more appraisals coming in short. So he said about 4% of files are coming in low right now, but it's definitely increasing. On average, they come in about 5% low. But remember, that number really trends in different directions depending on the market and the agent. And so, again, guys, because supply is so limited around the country, people are willing to just pay to get the house now. And again, value is really determined on market price. And so if people are willing to pay over an appraised value, that really is the inherent value. Appraised values look back 6 months, so realize that's historical pricing. And while it does take into some account market trends, it's never going to be a totally accurate picture, because like we're looking into the future now. All right. All right, guys. So I'm going to answer some of these additional questions here. Get your last minute questions there. Okay. Do you recommend buyers get fully underwritten pre-approval in this market, or is a regular pre-approval enough? I think that the more strength in borrowability that you can show, the better you will be. So if you can show them that you've already been through underwriting and you can take away less strain on the seller, I think that it makes 100% sense for you to do that. I don't know that most lenders will really take that additional step, truthfully, because it is kind of cost intensive for them. And, you know, so I don't know. Now, if it's and not all banks do that. It's like most banks will do loans like just in process. So I don't know that it's necessarily important to do right now, but I do think that if you could get it, I do think it could give you a leg up. All right. So Maria Flores says, "Hola, I am on an FHA loan with equity. My mortgage payment is $1960. My interest is 3.375. Should I refi to pull $20,000 for my next investment down payment? If so, how much would the payment be?" I have no tools to calculate that for you right now. An investment down payment typically has to be 20% down, so you will want to make sure that that $20,000 is enough. What I always recommend to people, truthfully, is if you are new to investing, it might make more financial sense for you to put a lesser down payment and upgrade your primary residence and look at what the cash flow would be on that particular scenario. Devin says, inventory is low, advanced topic, but thoughts on hard money to buy, then refinance into a conventional loan. Yeah, lots of people are doing it. And so it is a really great strategy. So, you know, I think it's, what is it? Well, and other people are doing, they're doing this method. It's called BRRRR. So it's like buy and then and renovate and refinance. And so essentially what they do is they get hard money to cover their loan plus improvements, and then they refinance it into one whole loan. I see it happen all the time. We do them all the time for investors. I think it makes you competitive. And if you're willing to pay the additional fees to make that happen, I say it's a good strategy. Okay, so thank you so much. It's a gamble here, especially with seasonality just having passed, and considering will the appraiser use 1 month of the 1 to 3 month comps? Oh, the anxiety. Thank you. Yeah, so this is typically the time of year when I do see appraisals come in lowest. It's this March to May madness, and it's typically when buying season is at its peak. And so, and why that is because the 6 month look back includes the times when it's the slowest during the holidays, like November, December. But I do think that I don't know that values have really been impacted as much by the holidays. And I do think that if there are recent sales within 1 month and there's enough of them that show market trend, I think that they will use those. Also, it would behoove you to like prepare an appraisal package for the appraiser with all of the relevant comps, improvements, area specifics that they might not know that will help get you that appraised value. Okay, so Karen says, Harpreet, hello, how are you? Karen says, with crypto being more popular nowadays, can buyers use crypto for their down payment? So Freddie Mac actually just rolled out some new guidelines on this, and essentially they're saying that the funds have to be withdrawn and liquidated into an account that we can validate for 60 days. And it's tough right now. There are some instances when we can use Coinbase because Coinbase does have statements and that you can show your length of ownership. But it is a lot more complicated. Crypto, for most people's thought is the way of the future. But because we want to protect against money laundering schemes and fraud, it's really hard to use statements that you cannot validate that belong to the actual person themselves, like the buyer. So I think that is going to be an ongoing debate in housing. And so I'll keep you guys posted. All right. Harpreet says, is it a good idea to waive all contingencies for first-time homebuyers? We are in the market to buy a first home. We are pre-approved and putting 20% down, but hesitant to waive financing. What should I do? Generally speaking, I think that if you're willing to show that you have 20% down, show proof of funds, shortening your inspection period, and maybe giving them a loan contingency date, which says, hey, at this time, once I have final loan approval, I'm waiving my finance contingency or something like that. There's ways to be creative about the verbiage. I think you're fine. I don't think that most people are waiving their finance contingencies, and that's anecdotal. So obviously I have no data to support that other than my own experience. But I think 20% down, strong conventional offer, proof of funds, shorten your inspection period, say that we will have a conditional loan approval to you like within 10 days of receipt and order the appraisal within 2 days of contract or something. I think those are really good strategies to use and talk to your real estate agent about. Alrighty. So Jake says, I'm self-employed S Corp as of the beginning of 2020. I've been working in the same business for many years, so my tax returns reflect the same income. But I did have to create the Corp because I'm in California. I'm being told by Rocket Mortgage that they will not give me a verified approval because I'm self-employed. Is this customary, and should I question this? So typically it depends on what amount you're applying for, because jumbo guidelines are very different than agency guidelines. And so generally speaking, if you're doing something agency, so conventional or FHA, if you can show a 2-year history in the line of work at a consistent pay rate that you are paying yourself self-employed, right, or that you're earning self-employed, we generally can use this so long as there is 12 full months on a tax return. So if you have all of that and they aren't able to approve you, I might seek a second opinion. All right, Syed says, how accurate do I see Zillow and other real estate websites when it comes to property estimates? Any recommendations to look for more accurate price estimates? Nope, I don't think that the data is very accurate, and I think it's all over the place. I think sometimes it gets close, and that's why people like it, and it's a free tool that they can use. But generally speaking, the information that they have on there is either outdated or they're using like a 1-mile radius search. I think Zillow proved that their model did not work based on them stopping purchasing homes or paying way over asking. So there's that. Talking to a real estate agent and getting their actual opinion, anyone who's been in the market for a long enough time will have a good idea of what your home is, and they can provide you with a comparable market analysis. That would be my best suggestion. Okay, so Raya says, what are my thoughts on mobile homes? What if that's all you can afford? What about modular homes? I think that mobile homes and modular homes are a way of affordable housing. I think they are so much different than what we think of them. They have come a long way. You're obviously on YouTube. Go to YouTube and literally look this up. They look like beautiful homes, with granite countertops and awesome cabinetry and wood floors. Sometimes they're 2 stories with a basement. They have really come so far. And so I think that they're great. Now, they aren't going to appreciate at the same rate that a stick-built house would. And that's just because the life of a manufactured home or a modular home is less than the life expectancy of a stick-built home. But it is a really great affordable option for you, and they still appreciate, and the land is still worth something. And so it's still definitely a good option for you if you're looking to own a home. Alrighty, guys. Well, we just reached the top of the hour. I just want to thank you guys so much for tuning into the lives, for supporting me in this journey. Don't forget to hit the like button. It means so much to me. And check out my videos last week. I did one on the Ukraine-Russia thing, and I did another one on how to navigate the volatility with interest rates. Definitely check them out. Give them a thumbs up. And if you love the value here, please subscribe.